The last few months in the stock market have been scary. Prices have been plunging and you see your account going lower. But guys, guess what? There are ways to make money while the stock market pulls back significantly. Two major ways. One, shorting. Sounds scary. Everybody says, avoid it, it's scary. I do understand that. I do not recommend the average person to short. However, if done through the right process, like Mo teaches in his Trader Mo channel about shorting as part of swing trading and long-term trading, you can do quite well. As an example, from the beginning of this month, May 1st until today, May 10th, I have 5 short positions on stocks, and I'm up over 10% on those stocks because of that, which is a pretty phenomenal rate of return. Is that a guarantee? Absolutely not, guys. I have the emotional tolerance to do it. I have the community of people in our community who are supporting me, and we talk about these things, and we support each other along the way. The second way, dollar cost averaging. Now, we've heard this term 1,000 times. What is dollar cost averaging? So here is the stock market's value over time, hypothetically. But here's what stock prices actually do. When you dollar cost average, you're buying every single month. Every single month, over and over till the end. You're overpaying sometimes, you're underpaying sometimes, but overall, your average is going to be this. So you might sit there and say, well, Paul, if I'm buying on the way down, how am I making money? Guys, it's not instant gratification. It's about buying great stocks and buying your ETFs at lower and lower prices. There are great companies out there that will sell for prices you go, why is this so cheap? That will happen. That has happened across the way. If you watch our other videos and join our community, you can see these stocks, what they've done. But this is the way you make money, the best way to make money. You compound low purchase prices along the way. When stocks are at their absolute low, or they're going down, and the world looks gloom and doom, I want you to remember one thing. I want you to go back and look at the chart from 1900 until now. Stocks have only gone up over that period of time. They've gone straight up. And guess what? We've had 2 world wars. We've had assassinations. We have had earthquakes. We've had hurricanes. We've had terrorist attacks. We've had every possible imaginable. We've had an entire several pandemics. And guess what? Stocks in the long run still go up. And part of the benefit of our community is that people can sit there and talk to each other, because when you're alone and experiencing this, who do you have to turn to? No one. But in our community, who do you have to turn to? You have everyone in this community up here. Everyone to talk about. There's over 6,000 people in this community who talk about investing and day trading and swing trading every single day. Everyone's there to support each other, because this is a journey, and the journey is not done alone. It does take a village for this to happen. Very few people can do it on their own. Warren Buffett had guidance. I have guidance. Howard Marks, every single great investor of all time has had guidance. The question you have to ask yourself is, where do you fall short, and how can that be supported by the EM community? So we're sitting here and we're trying to buy great companies at great prices when we realize the market is mispricing them. So as they misprice them because of gloom and doom news, you have to sit there and say, this is just the market being gloom and doom. I still need to buy these shares of this company, or still buy ETFs, because people will bail on ETFs too. I don't want my money to go to zero. If your money goes to zero in a broad-based ETF like VOO and SPY, for that to happen, we have far bigger worries in this world than your retirement account. It will not matter, because the country to go to zero in the stock market, you have to be basically Armageddon and chaos. So you might as well stick the money month in and month out. First key is, don't look at it every day. Second key is, be in the EM community so you can talk about these ideas. And when things are bad, I'll see people here talk about, this is the things we look forward to. Every morning when the market's down, I get messages from people. Paul, this is great. Look at all the red. This is exciting. Exactly. Oh my God, I just picked up more shares of this company because I loved it at 50. I love it even more at 40. That's the whole key here. The key is to sit there and use all of these tools that we have in all of our videos, including all the ones coming, to make the best investment decisions for yourself, and use the EM community to get the patience and resolve internally so you can withstand the bad times, which will end up being your good times. The bad times for everybody else as a value investor are the best times for you. The best investments are made when things are bad. Look at Amazon. Amazon in 2001 went from $113 a share down to $6 per share. For every person out there who says they would have bought it then, no, you wouldn't have. It fell 95%. And it's currently, after falling another 40%, is at $2,200 a share. That's 350 times more 360 times more than it was back then. And if you really believed in Amazon back then, but were scared because you saw the recent price fall, that's why the EM community is there. It's to evaluate stocks and evaluate investments and say, what am I missing? And guess what? There will be times where you're wrong, but the point is, we even have a chat in here about what did I miss? You can learn from every investment mistake you make. Talk to your community members. Hey, I just did this investment. It didn't work out well. Can anybody tell me what they saw that I did not see? Hey, I want to make this investment. You can search in the community for the exact investment you want to make, and it'll pop up the conversation. You can go right to it and say, guys, I'm thinking about making this investment. What do you see that I don't see? Or what don't you see? Well, here's what I see, and it might give some light to somebody else. As this community grows, more and more chats will be created, more and more people having conversations about this. And they're all using these tools. The biggest ones, Stock Analyzer and 8Pillar, but this retirement calculator shows you how important it is to just dollar cost average. There are other videos where we show people that not dollar cost averaging and being with a financial planner and jumping in and out of the market can cost you hundreds of thousands, if not millions of dollars in retirement losses. So everyone, one of the biggest issues we hear about is, Paul, it's scary to dollar cost average when stocks are going down. But let me just give you a very quick example of what I mean. Let's go to Berkshire Hathaway. Now, Berkshire Hathaway, we all know, is Warren Buffett's company. We're going to look at the Berkshire Hathaway Class B shares. And the reason being, it's a lot more reasonable at $300 a share. This is the chart of last year. Let's go to the max chart. Look at our 2008 to 2009. I'm going to go a little bit more focused on that area because it's really important for us to understand where everything started and where it ended up going. So let's go to 12/31/2012. So look at this, guys. It was around $72 a share, went up to 100 or so, went down to less than 50, and then went straight up, and now it's at $310 a share. So the community aspect and the dollar cost averaging aspect would have allowed you to say, I'm buying a great company at a great price all along the way. So yes, you would have been losing. But now when you bought all along the way very consistently, your average price would have been exactly where you started at. And then a mere 1 year later, you'd be in the positive again. And 10 years later, you'd have almost 5 times your money. That is the key to dollar cost averaging. Apply this to the S&P 500. You do the exact same thing with something like SPY. You look at SPY and you look at its history, the exact same thing. 2000 tech bubble crash, financial crisis crash, COVID crash, all of these falls, you're dollar cost averaging along the way. And after every single fall, guess what? You're like, oh, thank God I bought more. Oh, thank God I bought more. Thank God I bought more. Oh, thank God I bought more. That's the point. And when you're looking at retirement 20, 30, 40 years down the road, you're going to be so happy you did not care about these crashes. Because guess what? Ask your family and friends who lived through these 2 crashes. Yes, it sucked, but are they happy they stayed in the market? Absolutely. If they bailed early, are they happy they bailed early? Absolutely not. That's the benefit of dollar cost averaging and using the community to dollar cost average and have the stomach to do so. These tools are here for less than a cup of coffee a day. You can have all these tools and it can lead to hundreds of thousands and millions of dollars just by making 1 or 2% extra a year or getting rid of 1 or 2% losses every single year. That's how important these tools are. I even brought the swing trading. The swing trading is huge, guys. You can make money in any market and you don't have to care what the company does. You're just looking at price movement. And these are tried and true methods of trading. We have hundreds of people. We have 1,000 people in our Trader Mo Bid and Ask Nation who are making money like crazy. I'm one of the worst ones. I'm up 10% this year. There are people in there who are one of the guys last year made over 400%. Now, is that guaranteed? Of course not. But he has an incredible process, and I even go to him sometimes for, hey, what do you see here? And he'll teach me. And that's the whole point of the community. The teacher becomes a student. The student becomes the teacher. You're going to learn so much and make so much more money by applying these processes to your own methods. Use it as a way of enhancing your process because my process will be different than yours and yours different from mine, but we can use pieces of each other's process in the community to make our returns better over long periods of time. 2 ways to sign up. Everythingmoney.com or patreon.com/everythingmoney for international people. Again, less than 1 cup of coffee a day. You get 30 years of financial data, all of these tools and the community at your fingertips. It's so easy. Sign up now.